You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-exciting, ever-compelling, ever-interesting, ever-informative Options Insider Radio Network. Let's see how many adjectives I can go through before we start the show. And if you want to check out the most recent additions to said network, I encourage you to do that. Surf on over to the mothership, theoptionsinsider.com, or check out our mobile app, available for iOS, Android, and the Fire OS. Or, of course, you can go to those motherships, go to iTunes, go to Stitcher, go to Aha Mobile, wherever you find finer podcasts, you can find this fine program. And indeed, check out all the archives of the Option Block, as well as all of our newest programs, including our other fun programs that we dive into some more of the unusual activity going on in the options market, some education, a lot of good stuff over there on the old network. We're happy to bring it to you. And I'm joined on the old all-star panel today, a bit truncated. Unfortunately, the Viceroy, who made such a splash at our live show last week. By the way, thanks to everybody who joined us last week. That was really fun. And we're hoping to do that again one of these days because it was just a blast for all of us. But the Viceroy having a little bit of surgery this week. Nothing too serious, don't get worried. But he'll be out for a bit, approximately 6 weeks, actually. So we'll be Viceroy-less. We'll be looking to fill that gap with some other people, so don't worry, listeners. We'll still keep bringing you the same fun show, but we'll be hatless for a little while. But joining us on the truncated all-star panel today, starting off with the man beaming in from the Skype Mecca known as St. Charles, Illinois, good old Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Happy to be here on a crystal clear Skype connection. Wish I could say the same for the air today on an overcast day here in the Chicago area.
Yeah, you do sound pretty good today, so I'm keeping my fingers crossed that they won't drop you at any moment, because Skype gods out there in St. Charles, pretty fickle. Pretty fickle. I'm not sure if you've noticed that, Uncle Mike, on our recent shows, but Skype god's not exactly smiling upon you. And
no, I haven't noticed any of that. I don't know what you're talking about.
Speaking of somewhere else where the Skype gods are apparently smiling, is, of course, the hinterlands of Maine, from whence we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, are the Skype gods smiling upon you once again?
It feels like they're smiling on me somewhat right now. I just had Fairpoint did some sort of a deep dive into my internet connection while we were doing the show. So I think that might have
always helpful.
Always helpful. I've been trying to convince them that my internet cuts out. They're nonsense. It does not cut out, but Yet somehow it does.
Unless they do it to you.
Unless they drill me.
We recommend you do the most bandwidth-intensive thing possible right in the middle of doing the show. That always, we find, makes for compelling programming. All right, speaking of that compelling programming, let's just dive right into it before the Skype gods can screw us over anymore and dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we break down what was catching our eye in today's markets, and it wasn't a whole heck of a lot, to be frank, listeners. A little bit of move in the Qs, but most of the major other indices pretty much unched on the day. SPOO's down a little bit, Dow up a little bit. VIX Cash also taking a bit of a pop, getting some of that weekend back up to the 14 handle, 14.13 to be precise. So let's dive in from there. There were a few things to catch our eye today, though, so maybe we'll start off with you, Mr. Uncle Mike from RCM Asset Management. What caught your eye in today's plethora of scintillating activity?
I think you're being kind of generous with the plethora of scintillation with which you speak.
You got to sell it, sir.
Yeah, I'll give you credit for the salesmanship on that one. Not a lot going on today, and I think just we're awaiting a very data-heavy week. I think we might even be able to have an extended around-the-block time frame today with everything that we have going on this week, along with the Fed coming out on Wednesday. So really, I'm just looking across my watch list of everything with which I look at throughout the day, and pretty much everything out there, with the exception of the Russell and, like what you said, the NASDAQ, really not a lot of movement one way or another. So it was one where it was a toothpick day, putting the toothpicks in my eyelids to keep myself awake, for me anyway.
And Mr. Andrew, were you similarly challenged? Were you struggling to stay awake today, sir?
We were struggling to find some things to do, I have to say. Not the easiest day to find even short duration option trades. That bid and tap looked interesting for a while. The Yahoo looked interesting for a while. I guess we'll talk about that in a bit. But for the most part, to me, just why the VIX is 14, don't get it. I mean, the only thing I can think of is with, the Fed coming out with, this might be the big one. We're like, okay, rates are going to go up. That's the only reason I can see for the vol being where it is. Maybe people are worried about this new offensive against ISIS or something, but we really don't have any details. But I mean, there's just options feel priced for something to happen, and just nothing's happening. So it's somebody out there somewhere is buying up some options for some sort of decent move that we are not getting lately. And I can't quite figure out what it is. Normally when I can't figure it out, I just stay and watch, which is kind of what I did today.
Well, listeners, if you heard our live show, of course, we were all pontificating at the growing disparity between realized and implied vol out here in the indexes, and that disparity only grew today, implied ticking up, even though the index is essentially not moving. And we were talking on the last show that someone's got to come in and crush that disparity. Apparently not. They have to bid it up this week. That probably is an allusion to what Tusaw was talking about earlier there, the data-heavy week. That's pretty much the only thing you can really think of. And you're right, maybe some of the uncertainty on the international scene, but there ain't a whole heck of a lot of reason to be buying vol right here, and yet people are doing so en masse. So a weird scenario. You mentioned Yahoo a little bit earlier. Maybe we'll start there as well. A lot of people have been getting some love for Yahoo of late. They're trying to use it as a bit of a proxy to get into this big smoking hot potential Alibaba IPO out here. We hear a lot of people talking about it. I think Barron's was writing something up about it last week. Steve Steers over in the Striking Price, I think he was saying his pick was the Nove 43-48 call spread. Again, giving you a little bit of time on the upside in case this IPO gets delayed or whatever, and looking for participating a little bit to the upside. Yahoo trading today right around 42.5, so that would be almost an at-the-money vertical right there in Alibaba. I know you have some tech fans over there, Uncle Mike. I know they love one name in particular, but they might be partial to another. You guys getting any interest over there in saying, hey, I want to maybe expand my tech horizons a little bit on the part of your clients, and maybe are they starting to ask you about this? How can I maybe use options as a proxy to get into this, or is this pretty much just interesting paper for you to watch?
If it's not Apple, it's crap. I mean, what else could you know?
Yeah, there is no Yahoo Watch. That's true.
No. I'm intrigued by everything that's coming out with that, and I'm going to be watching just more as totally as a spectator on this, as will any client that has any investments with me. I think it's so ridiculously hyped that if anything, if I were to play it, I would want to do something more along the lines of shorting it, just because this thing, they're saying that in theory it has the possibility of being the biggest IPO in the history of the planet. And just in looking at it, I think this one's overhyped. I mean, I was a part of one of the best trades of my life was going long Facebook on the day of the IPO, in that I saved a man's marriage for that trade. He wanted me to get in on the IPO of Facebook, so I did, and it was like pulling teeth to convince him to scale into it. So he gave me, let's just say $5, so to speak. I totally forget what the amount of money was, but this was going to be his wedding fund, and I said, okay, well, let's just start with $1. And I said, okay, well, he really was not too keen on that. He wanted to put everything in right at the very first possible trade on Facebook. And I said, okay, well, if it goes up, we'll miss out on some of it. But if it goes down, you're going to stay married this way. And so everyone knows what happened with Facebook on the IPO. And then I had some other clients doing something similar, and we eventually sold some calls and sold some puts and ended up being profitable on it. We got out of it a while ago. But I really think that this one with Alibaba has a similar feel to it. And if anything, I would be looking to short something like this in some way, shape, or form, depending on what the options market would give.
Yeah, there's such a preponderance, I should say, of just bullish sentiment on this. You're right, and it is such a bit of an unknown. I mean, that Nove, let's take, for example, that vertical they're recommending out there in Barron's, that's going for about $1.70 right now. Is going for higher, obviously, today before the sell-off in the underlying. That's not an insignificant outlay for people if they want to come out and put out a 10 lot or even more of that, something like that. So you're not talking chump change to trade this thing out here. And, yeah, right, perhaps this thing is still – it's so hyped. You're right. I have a hard time kind of buying into the train, but nevertheless, it is pretty much one of the few things that makes any money for Yahoo at this point. So people are rightfully probably a little bit excited about this. I'm sure you guys have parsed this in your pitch chat over there, Andrew. What's the take over there? I know you have some pretty savvy clients. I got a chance to meet some of them last week in person. What's their take on this whole Yahoo Alibaba kerfuffle?
Well, I mean, we looked at it earlier. I've been writing just put spreads in it, like ratio put spreads for a while. And then as it kept going up and up, I just stopped. So I just collected the premiums on it. But as far as how this is, well, we were looking actually on a way to sell call spreads today, and it's trying to create some sort of selling an out of the money call spread that didn't look, it was Mark's idea. I don't think it's bad. We're just trying to get like the actual cash value, right? So the Alibaba IPO keeps expanding. Now they're trying to get more money for the shares. Usually that's kind of what happens to Yahoo. So they're going to, or what happened to Facebook. So they're really going to put out a lot of stock, right? And it's going to soak up a lot of available buyers at the beginning and try to maximize that, that first print, which makes sense for Alibaba. But I think it could make the shares a little heavier once that goes public. So it's just trying to figure out exactly, I think Yahoo owns 23% of Alibaba. And if you work that into the market cap, 23% of 150 billion is like 30 billion, plus their stake in Yahoo Japan. I think Yahoo as a company is valued at about $2 or $3 billion right now. And the stake in everything else is by far and above much more than Yahoo's worth. So it feels like it's kind of, sort of fairish value for a blockbuster IPO for Alibaba right now. It's kind of, I think, where the price is. So anything less than a blockbuster, like Mike said, it'll probably, it will pull back. It'll pull back a little bit. So, if anything, we were looking at selling call spreads, but I think we got till Thursday, so we have a couple more days as the roadshow continues, and get a little closer to the event before we do anything.
Well, you got Barron's talking up some call spreads, so there you go. Take advantage, sir. Hit that bid while Barron's is putting it in there for you. And we should wrap up since we're talking about heavily hyped names here. They don't get much more hyped than pretty much Tesla and its other counterpart there, subsidiary, affiliate, whatever you want to call it, SolarCity. Both of them taking it on the chin today, down about exactly 10%. So apparently it was sell your Elon Musk holdings portfolio day today. I'm not sure what the order came through from somewhere. Maybe he's just divesting of some of it. I don't know. But both of them are having a rare down day, and both of them pretty much identical in terms of percentage, which is an odd thing. Seeing Tesla red at all is weird, let alone this. I think some of the weight coming from a few analysts out there having the temerity to say, hey, maybe this recent rally was a little bit too much too fast, and that was enough to one of them actually canceled their 320 price target, God forbid. And so that's what apparently is weighing on the stock. And I won't even ask you two, Socks. I know this stuff is way too crazy for the myriad Grandma Agneses in Iowa out there in your portfolios. But what about you crazies over there in the pit chat there, Andrew? You guys looking at Tesla at all?
Yeah, we were looking at it, and I think what really got everybody's attention is, I think, Rule 201 or something. You couldn't hit a down tick anymore because Tesla was down 10%. So yeah, SEC Rule 201, and that's what got our attention for Tesla today. Part of the reg show rule, when a stock's down 10%, you can't initiate a short sale by banging away on the bid anymore. You basically have to put an offer out and let your offer be taken by somebody else or taken on an uptick or a 0+ tick. That was kind of the big thing. Like, wow, you had a big enough move where you couldn't short the stock anymore just by whacking it. So it seemed to have, after that rule went into effect, Tesla's slide basically stopped, pretty much dead. SCTY, I don't think got down quite that far, but close. So that was what we were looking at, and actually we have clients that are looking to sell puts in it, to be honest. Probably doesn't make a bad iron condor type trade at this point to sell some juice in it, but as far as where Tesla's, who knows where it's going to go. The one thing that was interesting, I think, that might have maybe got taken out some of these stocks is there's an article in the Wall Street Journal, and it was a front page article, or at least front of marketplace part, about just really high valuations of some Silicon Valley startups. Just high burn rates, higher risk. Nobody really thinking about rich too much. And he was just questioning some of the valuations on some of this stuff. So that might have been a reason why you saw a sell-off in like Facebook, Twitter, all of the social networking stocks. They all pretty much got slammed pretty good. So could have been this article. Making everybody maybe reassess a little bit. Of course, now on a day like that, when you see all those other stocks kind of getting slammed, Apple was only down 2 cents. Kind of the more stalwart type stocks did a little better today. But I think maybe there was finally a little readjustment of risk on risk profile for some of these names. So it's probably overdue. Tesla's going to have to sell an awful lot of cars to justify the market value or whatever other business they get into. Doesn't mean they can't do it, but it sure was getting awfully expensive at this point.
So you're saying they copied and pasted an article from 1998 and pretty much just reissued it today? That's exactly what they did, essentially.
I swear that's actually what the guy said. Literally, I haven't seen risk levels like this since 1999.
Yeah. Sounds about right. I remember hearing a few and reading a few of those articles back in the day, so that wouldn't surprise me they're coming out again. So yeah, and I had forgotten that it hit that level today, the 10% reg show level. Pretty much the salvation for Tesla today. You're right. Once you get down to that level, no more crushing the bids. And you're right. Tesla got down right about that point. It gapped a little bit below because it got down to about 249. That's a little bit south of that level. But you're right. Once that kicked in, it pretty much stemmed the tide. It would be interesting to see how low Tesla could have gotten if the regulators hadn't stepped in and saved it. So there you go. All you Tesla bears out there, you can lean on that one. Meanwhile, we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the show where we break down the weird, the wild, the woolly, sometimes just downright bizarre options activity that we're noticing that's catching our eye over here at the Options Insider. Going to kick things off with a name that has been a bit of a perennial stalwart in this segment over the past few months because of what's going on in that neck of the woods. It is indeed the RSX, the Market Russia Vectors. I said that backwards. Market Vectors Russia ETF, trading today, closing today, I should say, $24.12, down about 50 cents or nearly 2% on the day. So not exactly a banner day for RSX, but this is kind of par for the course from what we've been seeing out here of late. As you might imagine, given everything going on in that region, RSX, a bit of a volatile beast over the last few months. It got down as low as right into around the 23 handle or so. Then it kind of has vacillated between 23 and about 25.5 or so for the past couple of months. Kind of split in the middle of that range right now. But not surprisingly, we're seeing a lot of paper betting that trend may indeed continue. But before we get to that, let's talk about what we've been seeing in general out here in this name. And this is a name that pretty much has been lighting it up of late, averaging about 16,000 contracts a day. So a fairly robust time here for RSX. And what we saw in particular today was a total of nearly 70,000 contracts. So just paper palooza out here in good old RSX. And what in particular caught our eye, given that trend I mentioned earlier, I think you can guess where we're going with this. Yes, put palooza today in RSX. And I mentioned, listeners, let's get that number again. That number was 69,325 options traded total today in RSX. Of those, 64,490 of them came in one big trade on one strike. The SEP weekly 22.5 puts expiring right here at the end of the month here. And we profiled them this morning. Actually, it pretty much went up all this paper by the time we had profiled it at the end of the day on the site. It was pretty much 64,000 total. As you might imagine, it was a bit of a back and forth battle. I think this might be the first time we've used the term cage match on the optionsinsider.com. Check it out if you haven't already, listeners, on the website, the new write-up. By the way, I hope you guys are liking some of the new design tweaks we've added to the site, including the new featured images. People have been asking us for those for a long time, and we finally got those built in. Give the posts a little bit extra visual pizzazz. But getting back to the paper here, it was just a bidding war and a selling war to a degree here on that strike. We saw a 10-cent bid coming in, lifting the offer across exchanges, and then people started coming in, as you might imagine, and just taking advantage of that bid to pound it. And like I said, that's where we got to the cage match between the 10-cent bid and the 10-cent sellers. People were coming in all day saying, you want to buy these things, we will sell them to you all day long for a dime. They went out a nickel bid at 15, so clearly this guy got his fill. 64,000 was apparently the number. But we've been talking about put buying out here quite aggressively. This guy saying, yeah, I'm not done, not by a long shot, and I'm buying up some pretty aggressive, pretty near-term puts. These go out in a little over a week here, so this is pretty aggressive paper. Mr. Rock Lobson, now that you're done with your global traveling here, or at least domestic U.S. traveling, what's your take on this put palooza here in RSX?
All I could think of was cage match, to be honest on this. It's like one guy punches the other guy in the jaw, and then the other guy punches the other guy in the stomach. Jaw, stomach, dime. I mean, 3,000, 2,000, 3,000. It just was kind of really goofy paper, you know? And that's basically what I was trying. And then the next question is that's an awful lot of work for the dime. From either side. So
yeah, that was kind of my take a little bit as well. Who are these people lining up to hit this bid, 65,000? I could see buying it being questionable, but also that's a bit of a roll of the dice in this name these days, let alone 65,000 times.
Yeah, I mean, clearly somebody was real. They'll take the RSX at the low, or what I would say is a pretty low level for the index. Basically, I think that's the price earnings ratio on the Russian stock market at a 4x or something like that, really low level. And then the other, what's the guy buying them for? Because, with 2 weeks to go to expiration, you need that you need RSX to get down there in a hurry. So it's either they think the situation is going to get beyond awful and the West locks up their deal with Russia as far as we're not doing business with them anymore, or maybe they're just buying underlying against it and they just want some protection for a couple of weeks. So very curious volume in any, because I don't know what you get out of it. Like, what do you get? I don't get it.
All right, next up in the old odd block here, we've got COMM. This is Commscope Holding Company, ticker symbol, like I said, COMM, C-O-M-M. Closing today, $24.63, down about 55 cents, about 2.2% on the day. And this is the name that does, a whopping 267 contracts a day. So not a size paper machine here, doing about 4,000 today. So pretty decent day today, and pretty much 50% of that palooza of paper coming in one size trade, again on the puts. So it was a put day today on the old street today. In particular, it was the SEP 25 puts, regular monthlies. There are no weeklies out here in COMM. Going up, paper buy-in here for prices between 50 and 70 cents. And make note of that between, listeners, because that could indicate who's actually trading these things up here. We went up in small, pretty much steady pieces throughout most of the day in various prices, various implied volatility levels. Clearly, this looks like, I should also mention, not much open in just about 500 contracts, so about 4x that going up today. So clearly, this has all the hallmarks of our traditional friends, the newsletter traders. I also do notice here about a 500 lot straddle going up, looks like, on the NOVE 25 strike as well. This could be related to that. This could be the other side of the newsletter guy perhaps putting something else on, unless he recommended a new straddle as well. I don't know. But interesting paper up here in good old Commscope. Mr. Rock Lobster, what was your take here on the Commscope put and straddle palooza?
Yeah, we'll wait to see if anything comes of it. Small put buying, you got 4 days left. They've got to just be right here, Mark. I don't see any way to, game this or create some other kind of trade. It's just I'm buying some at the money puts. The stock's down a little bit. You're not paying a lot of premium over parity for them. And you're just waiting for the stock to crap out, which we have not seen an awful lot lately.
Yeah, it hasn't been stock crapping. Unless you're talking about Tesla today, then there was indeed some crapitude out there in that name. But other than that, not a lot of crapping out there in the old market. Using the technical terms here today, are we? All right, and wrapping things up here, listeners, with a newcomer here. Haven't talked about this one. I would definitely remember this name. This is Itau Unibanco Holding SA. This is, of course, an ADR. This ticker symbol ITUB, ITUB. Closing today, $16.14, up about 30 cents or so, or nearly 2% on the day. And this is the name that does about 1,600 contracts a day, so fairly robust from an odd block perspective. Doing about 6,000 today, so fairly decent volume. And lest we forget that people like calls, too. I know it's hard to imagine, but they do. We got some call trading out here in good old ITUB. I just like that. I like that ticker, ITUB. That's a good one. Makes me want to trade it just on the ticker alone.
It rolls off your tongue. What are you trading? I'm trading the tub.
Yeah, exactly.
Trading ITUB.
It's a good one. I like it. All right, and what we saw out here today, listeners, was a call palooza. Flipping the script a little bit. No more of those put paloozas. They're far too depressing. We'll do call paloozas instead. And this is the DEES call palooza, in particular the DEES 19 calls. When we wrote it up this morning on the old site, the mothership there, the Options Insider listeners, we profiled them. Someone coming in and pretty much taking up about 3,000 of these DEES 19 calls for about 20 to 25 cents. Then, as you can see, the day went on and more piled into the tune of nearly 2x, about 5,500 going up total on the strike on open interest of just 1,500 contracts. So clearly some open in paper. Looks like this is pretty much buys because these are going up at or near the offer here. They're 15 cents at a quarter going out. So this guy was pretty much lifting the offer for a bunch of them. Went up in pretty much two large blocks on the Philly with splits because the guy couldn't get all he needed at one price. So he gobbled up the rest. And this looks like you're pretty much standard straight up, pretty far out of the money upside call buy. Anything else to indicate there might be something else afoot here, Mr. Andrew? Some stock, something else cooking? Or is this guy just swinging for the fences?
Yeah, I looked at some blocks. I mean, there were some smaller blocks. What is this, about a 15 delta call times 500,000? So that'd be about 150,000 deltas, I think, 15%. Now that's 75,000 deltas. I did not see a block that size go up. So I certainly didn't see the 500,000 shares it would have taken to make this a buy right, a 20-cent buy right. So I just feel like this is upside spec. You know, they have this election going on in Brazil. The Brazilian market's tanking. If you've been looking at it like Petrobras and like the EWZ is an ETF, both kind of in the toilet. So Itau Unibanco Holding getting kind of smoked with it, and we're getting selling off a little bit. And I think this is just they're trying to just cheap shot the upside here into the end of the year. But they've got a pretty. I mean, the stock was just trading $18 literally not very long ago. I mean, every one of these Brazilian stocks looks like it's fallen off the face of the earth. I don't know if it's the rise in the dollar or just this election is making people a little worrisome along the two leading candidates. So, but clearly a very bullish bet that we make a parabolic return to the 18 and a half number for ITUB.
Good old ITUB. I love it. All right, listeners, that's going to do it for the old odd block. And as I mentioned at the top of the show, no Alex, so no express block, but we're going to keep on rolling right on into the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, listeners, you know what that sound means. It's Monday, of course, Monday's show. I should mention the date. I always forget these days. You guys want the date. It's Monday, September 15th. That means it's also time for some strategery. Yes, it's time for Uncle Mike Tusaw to come on down from the mountain, stone tablets and bubble pipe in hand. I do remember Uncle Mike, one of the listeners at the live show, remarked that you didn't have your bubble pipe with you, so you have to bring that to the next show. So what do you have on the docket for our listeners today? Uncle Mike, you mentioned it's a pretty data-heavy week, so maybe something to talk about there in the old strategery block about what's to come this week and how you may want to deal with that in your portfolio.
Yeah, I think that today's strategy block, folks, could possibly be one of the most important strategy blocks you guys ever hear. And some of you, this is going to be old hat to you, and you're going to say, oh, no big deal. But hopefully you listen to it. It's a good review. I'm going to be saying some pretty important things in terms of having a plan. But my hope with this is that oftentimes maybe Christian evangelists say that if they talk to 500,000 people, if one person gets saved, it's worth it. If politicians, if they make some weird law, if it saves one life, it's worth it even though it costs the taxpayers billions and billions of dollars. I'm kind of going along those lines today, folks. I want to go over ways with which to defend short premium when there might be a lot of movement. Now, whether we're going to get a lot of movement this week or not, who knows? We do have a Fed announcement. I believe we have CPI coming out tomorrow morning, so I guess it'll be too late for you then, but for those of you listening to this. But nonetheless, I want to go through the ways with which I like to defend short premium positions if there is going to be an announcement of some sort, because of the fact that if you don't, you can be going home with an empty account, and that's not what we want to do. Well, or you might already be home with an empty account. Either way, it's not something with which you want. So let's start off, and once again, this isn't necessarily the end-all, be-all way with which to defend short premium positions. This is just the way with which I like to do it. These are my rules, and hopefully, or maybe these can work for you in some way, shape, or form, but if not, make sure you have a plan nonetheless. Let's start off by, let's say that we are selling a short put. Now, first off, I have no naked short puts going into this week, so that's probably the best way to defend yourself against something. It's like my old wrestling coach used to always tell me the best way to get out of a double chicken wing is to not get into it in the first place. But nonetheless, let's say that you have a short put. XYZ stock's trading at 55 and you're short the 50 put, whether it's for this week, next week, 2 months from now, 2 years from now, who cares? You still have the 50 put as your short put. This is the way with which I like to look at it. I never leverage if I am selling a put short, meaning that if it's for me personally or for my client, if I'm selling that 50 put, I have $5,000 in my account for every contract with which we're selling. Maintenance requirement dictates that you only have to have maybe $2,000 to $2,500, just depending on what your broker says. If you have portfolio margin, it would be approximately a 15% drawdown would be the requirement. But for short puts in and of themselves, I personally have 100% of the risk in the account for that strategy. There's other strategies with which I do leverage at times, which we'll talk about in a moment. But for just a general short put, I'm cash secured. So with that in mind, I'm a little bit more lenient when it comes to a short put. Because if the stock were to go down to 46 or 47, in my opinion, that's when, hey, I'm fine owning that stock at that point anyway. So who cares? I'm happy to own it at 47. Yeah, I got in at 50 minus the premium with which I sold. But at that stage, usually in terms of risk management, it's a lot more loose. Now, with that being said, why will I let it be more loose? Well, that's because I have the money to finance it, and it's mathematically impossible for me to get a margin call on such a thing. Now, at that stage, at what point do I just get out of this short put? Let's assume it goes down to the level with which where is my pain mark, so to speak? Well, that would be at whatever level I set the stock's pain mark. So as soon as the stock were to go down to 46, 44, 40, whatever the case may be, at that stage is when I would buy to close the put option. Now, you might say, well, but Mike, why not just try and roll it down? Or perhaps you could maybe buy another put to hedge against it or something along those lines. Not what I do in this case. The reason with which I don't buy another put, let's say the stock goes down to 49. Why not buy a 45 put to hedge it? Well, I'm not looking to leverage myself in that case, and I have enough confidence in the stock to be selling a put on it in the first place. So that's not one of the trades with which I'm going to hedge. I'll just simply get out of it if it were to go down to the 42 or 41 level or whatever level I set it at. Maybe it was 47. Who knows? The other reason with which I don't like to buy a put as it goes down is because typically as the market goes lower, options become more expensive due to the inverse relationship between implied volatility and the market. Now, does that happen all the time? Good gosh, no, but a lot of times it does. So that's another reason with which I don't like that strategy. So with that in mind, I would suggest trading a put option from a risk management standpoint, if you're selling a short put, to have the same target to get out of it as you would with your stock. Now, yeah, implied volatility is going to go higher on that short put, but if it's in the money, like my personal short puts would be if I were to get out of it, it's going to be close to par anyway in most cases. So it's time to move on, do something else. I was wrong. I am man enough to admit it. Now, what if it actually goes up? Good gosh, man. You make a trade and you can actually make money on it? What the heck do I do with such a thing? My general rule, folks, is that I want to get out when I can capture 80% of the potential premium. So in other words, let's say that I sold this short put for $1. If I can get out of it and buy to close at 20 cents, that's when I get out. Reason being is because it can happen. You could make an argument for 70%, 50%, whatever the case may be. But my comfort level, what works for me, what I feel is most efficient for short puts, for credit spreads, for pretty much anything for that matter, general rule is around 80% of the potential profit. I'm not looking to get everything. I've seen too many horror stories of people going into expiration, trying to let things expire worthless. Now, granted, if it's a short put that I'm trying to own the stock anyway, then that's okay. But if I'm leveraged in any way, or if I don't want the stock or something along those lines, then I'm really not a fan of letting stuff expire worthless. I've seen too many trading snafus, seeing too many crazy announcements happen right after the close on Friday. So with that in mind, my advice to any of my clients, whether I'm trading their account or just advising them on their trading, is to never let options expire worthless. Get out. If you're in cash, all those bad things, they can't hurt you. Now, let's say that you're selling a put spread. Let's say that I'm being a little bit more aggressive, or this is one piece of a bigger puzzle to where I want to maybe sell some premium to finance the longer dated puts, or let's say that I want to just collect some income and be a little bit more levered on it. Same scenario, XYZ stock's trading at $55 a share, and I am short the 50-45 bull put spread. Once again, this is something to where it may or may not be the right thing for you to do this week. I'm actually in a bull put spread right now on SPY, a short put spread, but this is part of a bigger picture in a lot of cases. In some cases, for some clients, I'm just in that spread, but for other clients, I am as part of a hedging strategy, and it's just one piece of a bigger puzzle. So with that, this is the way with which I am managing that spread. If you're getting into the spread fairly far out of the money, meaning that if XYZ stock is at 55 and you're selling the 50-45 put spread, then my opinion, and this is if you're leveraging, my rule on it is that as soon as I lose as much as I am trying to gain, then I will get out. Now, you can have a delta mark on it. Maybe you get in when the short put has a 7 delta. You can get out when it goes up to a 25 delta. You can do it 8 ways from Sunday. But let's say that I got $1 for this 50-45 bull put spread. As soon as I need to pay $2 to get out of that spread, I get out of it. Occasionally, I might roll it down to another month and week if I still believe in it, but action needs to be taken. And the reason that I say that is because of the fact that it's at that point that gamma becomes too strong for me. Now, let's say that I would do maybe the 54-49 bull put spread. Well, maybe I might have to make that one a little bit tighter. I would have gotten a lot more premium for that spread, but I need to keep my the stock price risk a lot more tighter on it. So with that being said, general rule for getting out of something with which you are levered on and you are short premium, once again, if you are levered on it, meaning that you don't want to take on the stock, this is not a buy and hold investment. You want nothing to do with this. You just want to sell preem, live the dream, as my good friend Mark Sebastian says. If you're looking to do something like that, then my personal rule is that when I lose as much as I am trying to make, at that point I either make an adjustment or I simply get out and wait for another trade. Once again, to the upside, let's say it's working in your favor, same rule holds. If once I can capture 80% of the goal premium, at that stage, I get out of the trade. So with that being said, I would recommend that you have some very hard, firm rules going into this week when the Fed's doing their thing, when we have all these announcements coming out. Because if you're a premium seller this week and we get a lot of movement and it goes against you, this could be a very painful week for you, and this could end your trading career if you don't have some type of trading plan. What I just mentioned is the way with which I like to look at the markets, and hopefully this helps you in one way, shape, or form. And that's one to grow on for today, Mr. Longo.
All right, good stuff, Mr. Tusai. I could see you had a lot to get off your chest there. I could see it virtually through the Skype window that you had a lot to say there. An epic, a mega strategy block, if you will, listeners. Hopefully you found some nuggets, some pearls of wisdom that you too can take to heart going into this crazy week. And speaking of this crazy week, let's get to it. Let's dive right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, Mr. Andrew, wake up there. It's time to get going. I know you want to use your voice. You've been saving it up for this final segment here, and Uncle Mike's been alluding to a lot of good stuff. What are you watching for the week to come? What are you keeping an eye on? What's catching your eye this week, sir?
Well, I think I got the title for the show. You remember Sanford and Son, when Red Fox used to say, "This is the big one, Elizabeth. I'm coming. This is the big one."
Coming to join you, honey.
I'm coming. That guy always killed it. But anyway, I think that's what the vol's pricing. Like, this is a big one. Interest rates are going to go up, which overall probably is a good thing. It's about time they do, because that means actually people want money again. But short term, like Mr. Tusa said, I think really, be able to live with your positions and have an adjustment routine. Again, I'm still looking at Yahoo. I'm looking at Brazil and that emerging market, kind of getting set up for, maybe a rise in rates here, maybe brings that, so-called carry trade scares the crap out of everybody again. Those are kind of basically, I don't have any vol trades per se. I think the vol's kind of in a strange place for me, so I don't have anything on in it. And that's basically And that's what we got. It's sort of, I'm more interested in like what happens afterward if it's an opportunity for us to actually sell some juice. After the Fed, don't quite know what I'm going to do in any kind of size before, besides just some of the equity holdings, maybe overwrite them a little more than normal, maybe a little protection in some, but for the most part, I'm watching and I'm waiting to see if anything looks a little bit more interesting tomorrow.
All right, and Uncle Mike, what is on your radar for the week to come, sir?
I don't know, just going into this week, I keep thinking of that part in the Aladdin movie where it's something da-da-da-da-da-da, Alibaba. So the catchy name for sure, but I think the big news of the week is going to be what the Fed does on Wednesday. That's the main thing with which I'm focusing on. We do have a lot of economic data coming out this week, but overall the Fed, and I'm curious to see how bonds react to this. Bonds have been a little bit of a slide lately. They're pretty much flat today, but it's going to be interesting to see how bonds react, because this has been one of the most head-scratching bond markets, I think, ever, and that the Fed keeps selling all their bond holdings, so to speak, or keeps not buying more of them, I should say, and somehow bonds really have not gone down. But nonetheless, it'll be interesting.
All right, good stuff. I love some Tusaw singing here on the show. We don't get much of that. We got some Andrew singing on the live show last week, and now Tusaw perhaps feeling a little bit jealous, wants to get his own bit of licks in on the show. Unfortunately, that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. The Rock Lobster had to leave us. The Skype gods are not smiling upon him, listeners, so I'll just go ahead and mention, if you haven't done so already, I know a lot of you have, but surf on over to OptionPit.com. Check out all the stuff they have, the archive webinars, the new shows coming up, the boot camps, even the pit chat. Something over there will catch your eye. OptionPit.com. to learn more. And before we go, Uncle Mike, Tusaw, what is cooking? What is coming down the pike over there in the land of RCM Wealth Advisors and RCM Asset Management?
All right. Well, folks, if you are interested in working with an investment advisor with whom we'll be happy to work with you at $500 a month in terms of your net investment outlay, I am happy to work with you personally in one way, shape, or form. I understand options. I believe in them in a lot of ways, and they're not for everybody, but they are for most people. Give me a call at 312-212-3531 or send me an email at mtusaw@rcmam.com.
All right, listeners, and let's get out of here before the Skype god shut the whole thing down. If you want to learn more about anything we're talking about here on the old show, of course, surf on over to the Mothership. You can check out all the archived episodes there, theoptionsinsider.com. You can find something that will interest you. Of course, all the other episodes on our network available there. And while you're there, of course, leave us a question, send us a comment, write us an email, a Facebook question, a tweet, leave us a voicemail. No shortage of ways for you guys to get in touch with us here on the old program, and we look forward to hearing you do so, and we'll get to some of those questions on our next episode. And on behalf of Uncle Mike and the Rock Lobster, and of course myself, and the Viceroy, who couldn't join us but is certainly here in spirit, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.